Coming up in this show, I'll bring you my opening comments on the markets. Arby's got a trade idea in GM, and he's going to bring you an amazing lesson using multiple time frame analysis. Then I'll go into the stock market, and we'll take a look at SPX, NDX, and RUT, and our indicator bias heat map, which is available for level 4 members in the special that I'm going to show you. And don't miss that. Give the gift of askSlim, our best prices of the year, and we're going to send you an Amazon gift card after you subscribe. So pay attention as we get to that a little bit later.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market was mixed to lower last week, as nearly all the major indexes succumbed to some corrective forces. Only the NASDAQ managed small gains as of now on Friday afternoon, as AI continues to be a magnet for investor funds, as the market cap and earnings concentration is historic. Yes, I'm going to give you a historical reference here, but of course, when I bring something like the valuations, or what I think are insane valuations in the stock market, people call me a boomer or a dinosaur, that I'm living in the old paradigm, and these things don't matter anymore, and I just don't get it. You know, of course, if we can have Bitcoin at 100,000, I certainly don't get it, but I think that the historical references are important. Let's just think about the peak back in 2007, that was just before the great financial crisis, and the top 10 weighted stocks in the S&P 500 were a large 18.5% of that index. Let's think back to 2000. That's where the dot-com bubble was, just before that broke down. And that peak in 2000, the top 10 weighted stocks in the S&P 500, the concentration of their weighting was 27%. So it's 18.5% in 2007. In 2000, it was 27%. Here we are right now with historical highs in the stock market, and those top 10 weighted stocks in the S&P 500, 33.4%. That's 1/3 of all of the weighting of 500 stocks is in 10 stocks. Boomer maybe, but I remember the Nifty 50 trading back in the 70s, and I remember lots of times when the market was overextended and at ridiculous valuations, as you see, and the market had a long period of reset after that. So these metrics really illustrate the potential for high volatility ahead, and that situation likely to come once the mega caps get into a real correction. It also illustrates the importance of being able to recognize where the funds will flow once money starts coming out of the tech stocks. I'm going to show you that with our unusual indicator bias heat map a little later in the show, and you'll get a good sense on how to really understand where the money is moving into when it starts moving out of those stocks. I had an interesting comment the other day on social media that I brought to our members in a note, and I thought it was really good, because sometimes I don't even remember things about my long 50-year history. And he had said that, and it was obvious that he read about my history or had heard about it, that he said, "Slim, why are you still here in December? Don't you usually take off?" And I shared that, back earlier in my career, I had some big losses in December, specifically the biggest ones, well over six figures, coming in what were my biggest earning years. So I had great years and then had a lot of risk coming into December and then took big losses. And those still ended up to be very good earning years. But at that point, I said, maybe it's just better that I'm away in December and don't trade during these crazy cross currents and times when the cyclical patterns get skewed. And so why am I still here? That's the question, talking to you right now. Well, I'm here because I have obligations to the askSlim business and team. And of course, trading is in my blood and I'm always paying attention to the markets. But I am trading very, very tiny in this December. And that's just what I do to keep in touch with the market. But I'm here for you and for the askSlim business. Regarding this year-end period, it really does get very tough because the markets are moving because of individual tax situation, reallocations. Every year is different regarding that. This is a year where there's a lot of profits in a few stocks and a lot of losses in a lot of stocks. And that does bring the possibility for somebody nailing down profits at the same time taking losses to kind of neutralize that and not have tax obligations. So we might see a lot of that in the last couple of weeks of the year where there's some pressure on these mega caps, and that probably will keep the market from being able to make any significant upside move in here. So cycle patterns get skewed, and this is a time period, of course, where we're in strong seasonality. So markets tend to be able to hold up in December. But this, again, with the concentration that we have in these individual few stocks, that may be a little different than we've seen in the past. And it is a good time for us personally to take stock in ourselves and lay low. Ivor reminded me of some excellent videos I did in our trader psychology section, and he's going to share some of those in Discord for our members. So make sure that if you are a member or are going to become a member based on the specials that we're offering now, check into that Discord. You have a great ability to learn a lot from our team there, and Arby's going to share some of the videos in there. Regarding the stock market, well, I have a ton to show you coming up. You'll be amazed. For now, we'll let this holiday period play out and respect positive conditions in a rotational market that we have right now, and also respect the potential that there are risks coming in 25. And it's important for you to watch my year-end show, which will be available for our members at the end of the year, and I think you will find that to be very, very interesting as we look into 2025 at a time when there is a lot going on coming into this year with big changes to our government and a stock market that is priced at immense valuations with unheard of concentration in a few stocks. This week for the stock market, well, we'll call it mixed to lower. It would be just lower, but the NASDAQ is still hanging on to a small gain right now here at midday on Friday. Russell is the worst of it, down about 3% on the week. And that's because of interest rates, which have been ticking up. And of course, the Russell stocks are the zombie stocks. They're the biggest borrowers. And when interest rates are firm, the sellers come in there. And they were really helping the stock market to move up, the Russell, the mid caps. But now they are floundering. And I'm going to show you that in the charts coming up. Bond market down on the week as the 10-year yields pop a hefty 22 basis points. Well, that's probably about the Fed, and we're going to get another Fed cut likely by 0.25%, but then it's really likely that they're going to hold. If I were Karnak and I was, looking into the crystal ball and saying, well, what is the Fed going to do, or what are they thinking as I get into Powell's mind, I think he's thinking, well, we wanted to cut by 1 full percent. And so another 0.25% will do that. But then we don't know what the hell's going to go on with the tariffs and all of the policies coming from President Trump. So maybe we're just going to hold there for a while and take a look and see what happens. My opinion, tariffs at the onset will be inflationary, and you will see some pop upward pops based on those price increases. But then it will be negative for the economy, and especially if it becomes a tariff trade war where other countries respond and we go back and forth. And then again, there's me, the boomer dinosaur, looking back at 1930 Smoot-Hawley and how that devastated the U.S. economy when we got into that trade tariff situation. Gold, it gains small in a very volatile week. Same thing for silver. So, gold's pulling back into the support zone between 1662 and 2662, 2638. That's a pretty key level, and we're bullish on gold. But if it gets below that, I'm going to start to get concerned. Remember that you can watch our Future Speak show on Wednesday. Arvi does a brilliant job bringing you analysis of over 20 different futures contracts, weekly and daily charts, and you'll be able to see all of that analysis in Future Speak. That's levels 2, 3, and 4. Dollar, big gains this week. Again, it's strong on interest rates and the question on Donald Trump policies. How much is that going to hurt other countries or benefit the U.S.? Oil, it's moved down. And our target was that it would move down into this time period into the mid to low 60s. It got down to 66.5, and now it is giving signs that it may be getting ready to bottom. So we're looking at that. And we thought that sometime in this time period, somewhere between November and January, we would be getting an important bottom, very important bottom. And again, I'll show that as we look at the year-end show as we get towards the end of December. And I think you're going to find that extremely valuable. That's my opening comments for this week. And we're going to move forward into what I think is just a great show coming up with tons of information. I want to remind you as you watch this show, this is not a week you want to scroll forward because I've got great stuff in here as I tell you about the Give the Gift special that we have. And embedded in there is some use of the things that as I do the market analysis that you're really going to want to see. And I think you're going to find it really fascinating. If you're new, you can get acquainted for free. Just sign up at Snapshot Lite. Go to the top of the askSlim.com website, click free stuff, and sign up for Snapshot Lite. You're going to get some information every single day. Matt does a great job on that. On YouTube, subscribe to this channel, click the notification bell, and do like this video. Give us a thumbs up. And on X, follow me at askSlim. Any questions that you have, write to Matt at askSlim.com about memberships or our huge offerings on education and analysis. This is something that you're going to love. Arvi is going to look at General Motors and does a great job teaching on this piece. And he's going to illustrate negative conditions that are in here. And he's using one of his favorite grids that is available for our level 4 members. So take a look here at this great trade idea on GM.
This is an askSlim trade idea video walkthrough for a short-term short idea in General Motors. This is Arvi Ramachandran. It is December 12th, 2024. What we are going to look at here is actually a multiple time frame grid that is a slight modification of our usual chart streams grid, which we offer to level 3 and 4 members, which has all of our indicators on there. And it really gives you a great sense for how to actually structure your trades, right? Because in the end, what is most important is not what anyone thinks about a market. It is how do you structure ideas that are in line with your trade idea analysis. So that's what we are going to actually walk through here. Let's go ahead and hop into that grid. Okay, so this is our weekly, daily, 4-hour and 2-hour chart here for General Motors. Let's first go from left to right, or from longest time frame to shortest time frame, and we'll first look at the intermediate term. So on the intermediate term, what you see here is that General Motors was in a really clear rising phase, and I started to actually warn about this in our Trade Ideas feed on Discord, which is available for level 3 members and up. about a possible high that was forming here on this week, right there, as we saw a look into our key fib zone here from 58.05 to 63, and now a failure. What you're also seeing is that our RS weekly has now curled down, so it is giving us a warning of a possible peak. We have a trough that is due out around that March to April time period of next year. And you can see our levels here from 50.11 to right around 47.40. That's the 50 to the 61.8. And then we have a 78.6 down here at about 44. If we hop over now to the short-term time frame, this is the daily chart for General Motors. And what is key here is first you saw a failure right there, and then this bar that gave the warning. So what I added here as a note is we had to see the RS daily turn negative and a cycle breakdown versus 54.58. We got that right here as we saw that the RS daily was negative, and now we have a breakdown in the cycle structure that says that in all likelihood we are in a left-hand translation where the high has formed early, and our next trough is due 12.27 to right around 113. In terms of this trade idea, I'm looking for a bear flag to form in the context of a bearish slim ribbon and a bearish reversal scout or RS on the daily time frame, and I'm looking for a failure in this zone right around 53.47 to 54.82. If it has a daily bar that closes over 55.77, that would invalidate the idea. And I am looking for a move down into this intermediate term 50 to the 61.8 from 50.10 to 47.47. What I want to now do is hop over to the 4 hour. So this is one of my favorite time frames, is to look at the 4 hour because it will really filter a lot of the noise. And you can see we have a parallel slim ribbon on the downside, and we also have a bearish 4 hour RS as well. So if we see a little uptick here, I'll be watching for that 4 hour PO, which is available for level 4 members and up to actually load right up on their thinkorswim platforms, to then be setting up for a move down and look for follow through back down on the downside in GM. So keep your eyes on that. And finally, what I want to highlight on the 2 hour is actually just the askSlim market condition indicator at the bottom. What it does is it uses multiple time frames to give you a sum of the evidence condition. When it is inside of this plus or minus 25 area, it is neutral. When it is above, it is positive, and when it is below, it is bearish. And what is key and what I'm watching for is just the opposite of what we got back here off of that last key trough, which was a bullish cross where we moved from minus 25 to plus 25 or higher. You can see what happened after that. We had a multi-month rally in GM. What we are now at risk of is a bearish cross because we had moved from the plus 25 area or higher. We are at risk of crossing the swing zone to a move below minus 25. That would be a bearish occurrence here in GM based on the askSlim MCI. So keep that on the radar. It is certainly not a favorable overall setup right now for longs, and that's obviously what we are looking on the short side. So as always, if you have any questions about this, feel free to reach out to us through the comment section on YouTube. Thanks again, and hope you guys have a great day.
Stock market analysis and projections in the S&P 500. Important information. Please do read this slide. It tells you about our approach to the market, which is different than most other analysts because our analysis is flexible. And a lot of people who are first looking at our analysis say, Slim, you're moving the goalposts. They would rather be watching some other analyst that probably sticks to analysis that is consistently they're waiting for something to change. And ours is flexible, and you see that our analysis all the time. And the importance of trade ownership. It's applying our work to your own analysis and making the trade your own, and therefore you handle the risk. You don't wait for anybody else to tell you anything. And always be sure that your trading size is appropriate with your experience level, risk tolerance, account size, personality, and more. And always do consult your trading plan. So that's important information that is right here as you move forward, and if you're brand new, learning about the askSlim style of analysis. This is the holiday specials. Give the gift of askSlim for 2024. We're here right now. These are special rates, 3-month memberships, non-recurring. So when you sign up for this or you give the gift to somebody, nobody's going to get renewed on this. It's going to be you get 3 months of really learning from us and learning how to apply this analysis. And then you can make a decision if you want to stay based on more specials that we'll be sending you. So you can give the gift to someone you know who loves trading or technical analysis, or give the gift to yourself. That's great for first-time members. And for our current members, you can try a higher level for 3 months, and then it won't renew. You can go back to your original level if you want. And a bonus gift for you. Now, this is amazing. You sign up, and then we're going to send you back an Amazon gift card. So you're going to get some of the money back that way. And really, this is our the favorite offer that we have for people at the end of every single year. Give the gift. Let's take a look and just go to the askSlim website. You see at the top here, holiday specials are here. You just click on that, and you're going to get into all of the information. It breaks down what is in every single one of those membership levels, and of course you can write to Matt for that information. Also, level 2 special holiday offer, 35% off. It is just $114.75 a month. This is the level that all of our almost 1,000 videos are in there, and you're only going to pay $38.25 a month versus the regular $59 a month. And then we're going to send you back a $20 gift card. So that's really, net only going to cost you $94.75. It is a great deal. If you decide you want level 3, that's $232 a month, but we're going to $232 for 3 months. Sorry, that's $77.33 a month at that price. Plus, we're going to send you back $50 of that in an Amazon gift card. What a great offer. But this one is incredible. This is a very hot deal right now because 35% off for level 4, that's $303.75 a month. But we're going to send you back a $100 gift card. And see the additional bonus content coming up. We created a page. We created a way for our level 4 members, whether you're a new member or whether you're an existing member, to be able to get all of our analytical grids, and that's chart grids and our a new way that we have to look at it, which is our indicator bias heat map. And that's what I'm going to show you is how to do that coming up in just a few minutes. It's just a great offer there. That is the offer, and now we're going to get into the stock market. All right, so this is stock market analysis, cycle analysis, and projections. I'm going to use Katie's favorite grid. It's also very similar to my favorite grid to use as we look at the S&P 500, and then we're going to look at the indexes, focused list conditions, and more using our indicator bias heat map. So we'll take a look first at this 3-chart grid, which is the one that Katie said this is her favorite. So what we all did was Matt asked to talk about what our favorite analytical chart grids were, and said send them to me. And now we're going to assemble them all and be able to give those to our members that are in level 4. So that is what I'm going to show you right now looking at that. So let's take a look as we look at the stock market. This is the S&P 500. And I'm looking here at weekly, daily momentum conditions right over here, and the 2-hour right here. So just for example, the reason why I have it set up this way is that, if you were an investor, position trader, longer holder in swing trades, you'd really be looking at the weekly and daily. If you were a swing trader, or option trader, somebody that was really holding for, maybe just a week or a few weeks, you'd probably be looking at the dailies and the 2-hour. If you were an intraday trader, well, I don't have that on here, but you'd be able to set it up based on chart grids that we're offering for level 4, where you're using shorter term and adding that in here. So let's take a look here as we look at the S&P 500 weekly. And I'm going to do this for the S&P 500, NASDAQ, and the Russell. So let's take a look, and we see in here that the S&P 500, this was our period where we expected a lot of risk. AI certainly held this to be very strong, and as the momentum got strong in here, it was just there was just not a lot of downside that you could see. I looked for about 6 to 10% on the downside. The Russell gave up 6.1% on its trough right here. Here's the Russell pattern right there, and the S&P 500 only gave up 3%. So it's hard for us to tell whether this was where the next rising phase or this is, but it's in the next rising phase, and you can see that right over here as the market is strong. And even with a week where it started to give ground and the breadth figures started to get weaker, you hardly have given anything up here, and this is still strong as you look at that. So let's take a look here as we look at, now you notice that Katie has the disparity index down here, and that's one that she really likes, which shows you the distance between the price and a specific moving average. In this case, she has it against the 34-week moving average, and got up here near those highs where it begins to struggle. So that's one of Katie's favorite indicators right there on the disparity index. So this is the daily chart, and there's a little bit of a question on here, and I sent this to our level 4 members, and it'll be up on our chart hubs a little later on today. This is the question. The question was this the low on December 10th? Or is it this shifted cycle right over here? You can see the cycle patterns in here, whereas these are very clear cycles right here. Now, the question is, did this cycle, which was very short, actually extend out to here, right there? And that's where we're showing that shift. That's why. And I've got this vertical timeline right there and right there. Was it this low, or was it this low that made that cycle? Which low is the question. And based on the fact that you're not getting an upturn over here, it's really making me believe that, like I said early in the show, the mega caps, they have the big profits this year, and other stocks have losses. You're going to start to want to, if you're a holder, you're going to want to nail down losses and take gains and not pay taxes. And that's why there could be some pressure out over here, even going out later in the year. And this could extend out, maybe out to Christmas Day before you really start to get some upside. So you can see that the next cloud would be a bullish shape as we're projecting it out over here. But this is really looking like that December low was not the low, which would have been the older pattern right there. And the shifted pattern is right here, which could very well, go out to December 24th before we really get to see some upward turn. Our original thoughts were that this cycle went out to the early to mid-December, and now it looks like it could get out to the third week of December before that low is in place. Still, you see this positive momentum here with the slim ribbon. You see the slim ribbon PO on the bottom, which gave a positive signal there. You got an update, but now it's weakening again. So you can see there are signs. Still, the reversal scout is positive, the slim ribbon is positive, and I'll show you that in our indicator bias heat map coming up in just a few moments. Let's take a look here as we look at this at the daily momentum, and you can see in here on the bottom is this is the option bias study, and this is still saying that if you have positions on an options, you want to really, if you expect any moves to come of significance, it's really going to be on the upside. You can see the value of that as the market moved up here through September, through October, got a little correction here, and then it said bias to the long side again, and this is a great indicator. When it turns orange, it says there's a top, there's a little orange button, a little orange dot right over there, and that started to give a short-term signal right there that it was peaking. I'll show you again how to see where those are in a lot of stocks coming up. Here's the S&P 500 2-hour, And Katie has the on the bottom here the market condition indicator, and you can see the great indicator. It needs to cross over through the swing zone, the plus 25, minus 25, to give you signals, and this just shows you the immense strength at 91 right now. It goes from 100 to minus 100, and it's been just super strong in here. Even when it corrected in here, you barely got a dip, and then it turned up and positive again. So great indicator also on the market condition indicator. So that's Katie's look at that's my look on using Katie's setup in here on this chart grid. Let's look at the NASDAQ, which I think you're going to find quite interesting. And again, weekly, daily momentum, and the 2-hour chart right there. As here on the Thinkorswim platform, this does a great job of being able to fill these as these are all linked up on there. If over here, if I click on one of my lists here, I'm just going to click on Apple real quick, and you can see that just fills it up just immediately. And then if I want to go back to the look at the S&P, at the NASDAQ, just type it in and it fills them all up. So it's a great system. And you can see here that as I look at the NASDAQ, let me just open this up, that you can see that we're looking at a market, quite strong. Gets up here to these extensions from the minor cycle. So if we look at the minor cycle, which made a bottom here, this is that yen panic, and came up and came down. It projects into this zone. These are extensions from that minor cycle, and it's getting a little bit of resistance here, but not much. You can see still here the reversal scout is looking quite strong in there, just quite powerful. This is the looking here. What we have the setup is the 30 at the two different moving averages, which are 13 and 34 week moving averages there. That's our favorites on this. And often when the cycle comes down, it gets closer to that 34 week moving average, and that's probably going to happen somewhere out over here. So right now we're just looking for some continuation of upside move and some correction that we don't know where it's really going to come from yet. This is just the minor cycle right over here coming down. We had the same thing showing on the S&P 500. Here we have, again, the same look. So we don't know if this December 10th low was the low. You can see the NASDAQ is stronger than the S&P 500 as money moves into those heavily weighted AI stocks, tech stocks. Helped a lot here on Friday by Broadcom, which was up 20% early on, but then the market's starting to backtrack in there on Friday. So still up a little bit in the NASDAQ, but giving up a lot of those gains. So again, this is low, but the S&P 500 and the Russell says it's probably coming out over here more towards the Christmas time. So we're potentially looking for further decline. Here's the beginning of that cloud being drawn whenever this comes, right over here, and then we'll have an anchor point from where to draw that. And you could see by this configuration and translation in here, strong momentum, and this all suggests that once this correction is done, assuming it does hold up into the support areas in here, then we would expect the next period for it to be moving up. Support right over there in the NASDAQ is 21,345 down to this level over here of around 21,200. Let's go back to the S&P 500 for 1 second, because I didn't really tell you where those supports are, and that's the 23% right over here at 6,003, and then this level right over here at 59.45. We'll go back to the NASDAQ now, and you can see in here the NASDAQ momentum condition still very positive, slim ribbon. Here you can see the option bias indicator right there. Here's interesting. You see those two orange dots? That was telling you the market was making a bottom in that correction. So that was actually well timed right over there. And here you could see these, when you see these green dots down here, that says slightly overbought, but nothing really that much to worry about right now. And that's, of course, a short-term indicator in the NASDAQ. 2-hour chart, you can see here, the askSlim market condition indicator is still strong. It is at 100. That doesn't mean it's overbought. It just simply means the market condition is super powerful. This is an indicator that is multiple time frame weighted. There's almost no indicators like this out there at all. And so essentially what happens is that if the daily chart or 2-hour chart goes into a correction, it will pull back but not be able to get through that swing zone because the longer weightings are preventing that. And what that tells you is that if it moves into the swing zone and then moves up out of the swing zone, that the power that was given to the upside move still is there, and it's just a modest correction. It's a great indicator, and I really encourage you to become a level 4 member and get that indicator. Now let's look at the Russell, and there's really a different picture in here. As I said in the beginning of the show, the Russell is the weakest, down about 3% so far. You see it's gone through that 23% right there on the weekly chart. Here's your support right over here at 23.17. You still have the upward reversal scout right in here, so you're still in upside momentum. But you can see in here that's a little different chart in here, and this is the weekly pattern of the minor cycle just coming to a bottom. The Russell is timed differently than the S&P 500 and the NASDAQ. It's out of phase with those indicators, with those indexes. So this is where the support is there. When I look at the daily chart, now you can see this is, while there was a question about December 10th, whether that was a key low right here, well, there's no question here because it wasn't the low. And you can see in here the slim ribbon now turning neutral as the slim ribbon PO tells you that. Right over here crossing over, and right over here on December 10th is where the reversal scout turned negative, and that gave you the first indicator that something was happening. Important in that the analysis then would tell you that the Russell stocks, or the small caps, that were where money was flowing into when AI was giving ground a little bit, well, that's changing now, and there's no support coming from the Russell. So again, these lows somewhere out over here towards Christmas potentially, and then the next cloud formation over here, which once we have the anchor point, we will develop this. But that really looks like it could come down to Christmas right here. Support is 2302. This low right there is 2283 and the 78.6, and if it got down there it would be a bad message, is at 2255. Let's take a look here. You could see the momentum on the slim ribbon turning neutral right now. Still, you're getting conditions in here that are positive on the option bias indicator. Here's where you see it turns yellow and then it becomes neutral. So this is probably going to turn yellow pretty soon. As you can see, it takes a lot to get it to be negative, as it did right down over here, but then it immediately went neutral and then positive again appropriately. So that's a look at the Russell on the daily momentum. And here you could see, this is beautiful. Slim ribbon was positive right in here on the 2-hour chart. Here is where it turned neutral right over here, and you could see the colors changing in here because it colors the chart to purple. And here's when it went negative right there. So it went negative on December 5th, and giving a warning, especially to those shorter term traders, that the support was gone and then it was likely to be moving to the downside, and that worked very well. You can see in here that the askSlim market condition indicator now is at 44, moving down towards that swing zone, and it's key what it does when it gets down into that level. So that is a look at the Russell, and that's a look at all three of the indexes that I want to take you through right now, looking at that. But I have a lot more to show you, so don't go away, because we're going to look at the index focus list conditions and more using the indicator bias heat map. Let's just talk about that for a second. Our level 4 special holiday offer has this bonus bundle. where you're going to get our just amazing way to analyze the markets through specific chart grids, our individual indicators that are proprietary that we share with Level 4 members. And a thinkorswim is required for this, so it's important to say that. And valid only for new Level 4 members or our existing Level 4 members. You'll be able to go and be able to download everything that is included in here. I'm going to show you just a little bit of that moving forward. What you need to do is to, once you become a Level 4 member, go to the member pages right over there. And then what you do is go scroll down to proprietary indicator and grid resources. Everything is in there. Everything I'm going to show you now and tons of other things only available to Level 4 members. And you're going to love what I show you right now moving forward. Now, this is what's in there. You get the key benefits are directional bias in the multiple time frame indicators, trend conditions, momentum conditions. You do the momentum analysis. You can get momentum confirmation and momentum divergences, extreme levels and warnings of overbought and oversold, reversal warnings, peaks, troughs, all of that available to you. Strategic planning is what you do that gives you the ability to see the entry timing, the position sizing. There's so much in here. It's just crazy. 10 different grids are included that features the Reversal Scout, Slim Ribbon, OBI, MCI, SMI, Slim Ribbon, PO, and more. A lot of it which I've showed you right now. And you can set them up for your preferred time periods and look back periods. This is amazing. So you're going to get a resource guidance that will be provided for you, instructional video trainings, live support webinars, trade planning webinars, and this is unparalleled technical indicator grids crafted by our team over these years, designed to elevate your ability to do your trade planning. Truly invaluable resource for serious active traders and investors. Again, the thinkorswim platform is required for this, so we encourage you, if you don't have an account there, to open one, become a Level 4 member, and get everything that we're going to show you. Again, the holiday specials are right there. I showed you everything about Level 2, 3, and 4 earlier on in the show, but you can click there and get all of the information. So now we're going to look at the indexes on the focus list, conditions, and more that I think you're going to find really fascinating as we move forward. So again, these are the charts that we were looking at. I'm just going to bring in an indicator list right over here. So this is the country ETFs, and I have on the bottom here SPY, QQQ, Diamonds, and IWM. I have this programmed in to show you the market condition indicator, the Slim Ribbon, the askSlim Reversal Scout on daily charts, and the OBI. I just showed you all of those indicators. Now, these are programmable for different time frames in here in the Slim Ribbon Reversal Scout, and we'll show you how to do that. So let's take a look here. You can see Brazil, India, China, emerging markets, Turkey, Japan, all of those are in here. And you can just, let's say you want to know which are the strongest on the MCI. Again, I have them in there in this order because it's based on sensitivity. What is the most sensitive and the least sensitive? And the least sensitive is the MCI, market condition indicator. So I can just go in here and scroll, and you see which ones are really negative. And when you see red all the way across, you know that is a very, very weak index as we look at that right in here. And you could see in here looking at EWY that's really negative when you look at that. So if you look at the FEZ, which is the top 50 European stocks, this is negative. The Slim Ribbon and Reversal Scout and OBI has turned positive, but there's a lot of weight from the longer term that is saying be a little cautious in here. And you can see the readings on the MCI right over here. And if you look at QQQ, let's just go to, well, it shows Turkey is the strongest right there, green all the way across. Let me just look at no sorting right there, and you can see in the bottom in here, and that is the askSlim ribbon is really neutral right over there, and the reversal scout is showing you red here on the daily, but the OBI, which is more sensitive, is still green. So there's kind of a mixed look right over here, but clearly QQQ, green, 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 and this is 98%. I showed 100 on the chart. So this is a great way to look at that. I'm going to bring in even a bigger one right over here for you to see. And what am I looking at here? Well, we're looking at, again, the MCI, Slim Ribbon, Reversal Scout, OBI. But what I'm looking at is the askSlim focus list. So this is the 80-something stocks and ETFs that we think are the best traded, best optionable, most important, heavily watched stocks. And let's just do a review of those stocks and ETFs so you can get a sense for them. Let's look at the MCI, and you'll see the weakest ones right over here. Of course, you'll realize that there are some of these stocks that have been really weak. If they're red all the way across, you see Amgen right over here. That's not a stock that you want to be buying unless you're playing, some kind of a New Year bounce or something like that for very, very short term. I'm going to look at the greens right over here, and you can see in here CRM, Microsoft, PayPal, Tesla, Apple as MCI shows them as positive. If I just do the Slim Ribbon, the same thing, it shows you which are the most positive there. Here's the Reversal Scout right in here as it gives you that reading. Then I'll do the OBI, which is the most sensitive, and you see which are positive right there. And if I look for the orange right in here, so these are, if you look at Amazon, Broadcom, Google, and Microsoft, you notice those are all orange. Those are showing you that they are extreme overbought short term. Super bullish stocks, look at the readings right in here, but if you wanted to trade really small, your smallest positions, looking for a reversal, when it turns orange, that tells you there's a short-term correction, a short-term reversal likely. Great way to look at that. Let's just look at one more list in here, and we'll take a look here at the futures. So these are my own lists right in here. I'm going to go to public futures right here and look at how it just populates this using our indicators in here. When they turn black, I'm putting a lot of demand on the system right over here. So it's just waiting to fill up in here. So if you want to, again, look at the OBI, the ones that are the most sensitive, shortest term, you can see right in here which are the negative ones, and gasoline, the euro currency right in here, some other currencies that are negative, as you can see. If you want to look at the most positive, the ones that are very green across, of course, is the NASDAQ. You can see that as that is showing still very positive. There's one orange one right there, which is cocoa, as you can see. So if you were interested in futures, you'd be looking at that. So this is that amazing indicator, a bias heat map that we offer for level 4. A great way to sort through tons of things and really get a sense for strength and weakness in our proprietary indicators. And again, you need to be a level 4 member to be able to see that. So I really want to encourage you, if you scroll forward, or if you didn't watch any of our offerings that I showed earlier in the show, you want to go back and look at that, because using these indicator bias heat maps is just fantastic, along, of course, with our other proprietary applications that we offer, which is the Market Condition Monitor, which is another way to look at these things. We just have so much in there, it is incredible. Plus, for level 2, 3, and 4, you will get our huge video library. You'll see Future Speak show every single week, and just so much. I just want to encourage you to go and watch the specials that we have. This is just amazing stuff, and I know it will help you with your understanding of the market. And as you apply these things, you will develop into a style that brings you greater probability of success. That's what we want, is you to do better, because your success is our success. And if you're brand new, you can start right now for free by going to our free stuff up in the top of the askSlim website. Click Snapshot Lite and sign up for that. You'll get stuff for free, and then you're going to really want to sign up for one of these Give the Gifts. YouTube, subscribe to the channel. That's askSlim Team. Click the notification bell, like this video, give it a thumbs up, and follow us at askSlim. Any questions you have, write to Matt at askSlim.com. I want you to be so careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to say